Hello, everybody. My name is Denis. I've been a trader on Wall Street for the last 20 years. About 12 of them, I've been running my own algorithmic trading firm called Crypto Trading. Today, I'm here to speak about a new business we're launching. It's called Crypto, and its mission is to make cryptocurrency trading easier and less expensive for everybody, and to help you grow your portfolio faster. So, crypto, being a new asset class, newest asset class on the planet, has quite a number of pain points. And I would like to speak about a few of them today. Let's try to identify the first one together. Let's get a quick show of hands. How many of you have traded a cryptocurrency and have at least one account on the crypto exchange? All right, pretty good. We have quite an active audience. How about at least two accounts? 3 or more? All right, I didn't expect such a great turnout. Thank you, you're making this easier for me. So this brings us to the pain point number one. The space is extremely fragmented. We have over 100 exchanges listing over 2,000 various assets. Now, as many of you here know, if you want to be involved in trading crypto assets, you have to maintain a number of accounts, each with its own two-factor authentication, login, credentials, CAPTCHA. Everybody loves CAPTCHA, right? So it's really not an easy or straightforward process. And we believe we have a solution for that. We call it Crypto Trader. It's a modern web-based interface that's easy to use. It aggregates the market data and the pricing information from all the major crypto exchanges, and it allows you to trade Robinhood style from a single interface. It's easy to set up, it's very intuitive, it has institutional grade security, and most importantly, it is completely free. And isn't it great? Well, we're in California, so it's not just great, we believe it's amazing. Now, the next one I will put out there for you. We sum it up in 3 words. It is high trading costs. So I'll make a small departure from my presentation. I'll take extra 2 minutes, but I just wanted to speak a little about that 5.1 trillion figure that has been mentioned earlier. Being an active capital markets participant for many years and understanding how it really works on the back end, not just when you put the card in the ATM, I can put it in context for you. So the first thing about trading costs is obviously commissions. And I'm sure everybody heard about the money Binance has been making December, January. You know, everybody also knows probably somebody who started a cryptocurrency exchange, right? So to the 100 that exist, another 600 is being added because everybody's trying to chase these commissions. So let me put it again in perspective. Today, if you trade on an average cryptocurrency exchange, you should be ready to pay roughly 20 basis points of the money that you're investing to buy or sell a crypto asset. What does that mean? It means that you'll spend almost 0.5% of your money to trade in and out of a position. Now, it doesn't sound like much, especially when the asset is going up in price 20% every day, like they did in last fall. But when prices stagnate, it really starts to add up. So if we take that number and do a little back of the envelope math, we'll arrive at these figures. So cryptocurrencies trade roughly $5 billion, with a B, dollars per day. So $5 billion at 20 basis points is roughly 10 million bucks, right? Give or take. Now let's go back to the $5 trillion mentioned earlier. It is a much larger number. In fact, that number is 1,000 times larger. But the average, not the average, but the underlying cost to trade $1 million worth of currency is $10 per million, and that's on the high end. Now, if you multiply 5 trillion by $10 per million, you'll arrive at $50 million. So you have $1,000 more worth of assets being traded, while the commissions being paid are only 5 times more. You can draw the parallel to the costs now here. So the commissions are ridiculously high, and we should expect them to be going down sometimes, although that's not happening for some reason. Let's get to the next one. Oops, that's the first one. So spreads. Spreads are also a cost that you guys are going to be paying. It's not explicit, but it's still there. Again, they have improved over the years as more and more people entered the market, but still, if you're trading on a less liquid exchange or trading assets that are not as liquid as Bitcoin and Ethereum, the spreads get into a percentage or more, and again, you will pay that every time you trade. And finally, I want to talk about something else. It's the liquidity of the market. If you're trying to invest $100, you are likely to trade at the best bid or best offer. But what if you want to trade $100,000? If you put a marketable order in to buy or sell $100 worth of a security, you will very quickly go through a numbers of price levels. So there's an additional cost to all of the above. Now, is there anything we can do about that? Well, yes, we can. We call it Crypto Algo. It's a suite of intelligent execution algorithms that we've developed and have been using for the last decade that first have the smart order routing logic, so they are able to go to the exchange with the best price. They break up the large orders and hide the intentions of the trader, so the cost to trade becomes lower and the market impact of the trader's order becomes minimized. And thirdly, they try to trade passively, meaning that they, instead of just paying the spread, they put orders in the book to get executed that will allow you to not only earn part of the spread, but also earn lower rebates. And these are not your father's VWAP algos. These are machine learning-based algorithms that continuously assess the environment and try to trade with the objective of achieving the best liquidity in the shortest amount of time. And the best of all, well, no, they're not free, but they have been tried, tested, and we do know that they do work. And finally, as my time is running out, I'd like to speak about the last pain point of the crypto industry. Anyone who's been watching prices this year would have likely noticed that the prices have been going down very precipitously. Unfortunately, I can't make the prices go up. But I believe we do have something that we can offer in this subject. We call it Crypto HFT. It's a suite of fully automated algorithms that allows you to, by putting your API key to your existing account in our platform, allows you to run these algos on your account. I apologize, right? They're market neutral, so they try to make money, and they do make money irrespective of the market direction. And most importantly, they've been tried and tested with our own money, so that we do know that they work. Now you will ask, this is great, but can these guys really pull it off? So I'll answer that question in 3 parts. Our team has been together for almost over 10 years. And we, between two offices, have 25 traders, quants, and engineers working on solving very difficult problems in finance. We have a mature technology stack, so we're not inventing anything from scratch. We're simply adapting the methods that have existed in the industry to cryptocurrencies, and best of all, we're launching soon. So we expect to onboard the first customers for Crypto HFT later this month, and the rest of the platform will roll out in Q4 of this year. You can see the demo of the platform by going to demo.crypto.io, and thank you very much for your time.
Do we have a question? Anyone? Question? George.
What is your appraisal of this BACT proposal? This the New York Stock Exchange guy is launching to facilitate exchange of Bitcoin first, but cryptocurrencies in general.
Well, I think it's a welcome sign. They see that it's not going away. You know, they try to ignore it for a while, hoping that it would just die, but it doesn't. So them being the incumbent exchanges, they want to kind of stay on board and try to get a part of the action, of course, because they also read the newspapers and they see that you know, BitMEX is making more fees than they are, and them being like, you know, global presence with tens of thousands of people and hundreds of exchanges. So I think it's a welcome sign. At the same time, I think it's conflicting with the value proposition that you were saying, you know, security and privacy is not going to reconcile with New York Stock is trading on New York Stock Exchange very much. It will for a segment of the market, total market, but not all of it. So I think that the market will evolve and there will be some duality. I hope that, you know, it will be with the same price. I'm not a blockchain programmer, so you know, anything that will make transactions go faster on Bitcoin, I think is a welcome sign. I don't know, we do trade it and we move, you know, move tokens between wallets and exchanges, and it's not very fast. I mean, it's gotten better, but it was super slow last fall, for example.
Well, thank you so much.